Traders will be anxious to see if the Toronto stock market can produce another week of strong gains. Now, the two major central banks have delivered on major market expectations in the past couple of weeks. The Toronto market ended last week with a strong advance after the U.S. Federal Reserve announced an open-ended plan to spend $40 billion a month on a new round of bond purchases, and it will continue to do so until the job market shows substantial improvement. That jump came on top of a gain of over 2.5% the previous week after the European Central Bank announced a plan to purchase government bonds in order to keep borrowing costs under control for some of the most vulnerable Eurozone members, such as Spain and Italy. The strong showing has left the Toronto market up about 4% year to date. Meanwhile, the economic calendar is thin for the week. The latest Canadian inflation data comes out Friday. Stats Canada is expected to report that the Consumer Price Index rose 0.3% in August from July, which would amount to about 1.3% year over year. In the U.S., traders will look to continued signs of improvement in the housing sector. Economists expect housing starts for August came in at an annual rate of 765,000, up from 746,000 in July. CIBC economists think it will come in even higher at 775,000, which would be a post-recession high. On the corporate front, traders will focus on package freight company FedEx, which is viewed as an economic bellwether. It delivers quarterly earnings on Tuesday. However, expectations are already diminished after the company reported earlier that it expected to hand in lower than expected earnings because weakness in the global economy constrained revenue growth more than expected. From the Canadian Press, I'm Malcolm Morrison.